Today, we are diving into a company that's right at the heart of America's big push in energy manufacturing, First Solar. It's a really fascinating story where you have this unique American tech that meets some incredibly powerful government policy. So let's break it down.
All right, before we get into the nitty-gritty, just a quick heads up. I do own stock in First Solar, but remember, this is all for education and entertainment. It is definitely not investment advice. Please always do your own research.
So here's how we're going to tackle this, just like a portfolio manager would. First, we'll dig into the core technology. Then, we'll look at the massive catalyst from the IRA. After that, we'll check out the balance sheet, weigh the risks, and then we'll pull it all together into a really clear investment thesis.
You know what? I'm going to give you the conclusion right up front. The core idea is this. First Solar has a powerful, lasting edge in the race to rebuild America's clean energy grid. And it's all thanks to this perfect trifecta: its own special technology, a huge tailwind from government policy, and a rock-solid balance sheet.
Okay, so let's start with the tech. What actually makes First Solar so different from everybody else? Well, it all comes down to one material: cadmium telluride, or as we'll call it, CDT. So here's where First Solar's tech really starts to shine. See, most of the industry uses silicon, right? But First Solar CDT panels, they handle heat way better. Think about it. On a blazing hot day in the desert, their panels lose less power than the competition. And that is a huge deal for solar farms in sunny places. Plus, they work better on cloudy days and are actually cleaner to produce. And that performance advantage is exactly why First Solar just dominates the market for these massive utility-scale solar farms. We're not talking about your rooftop here. In these giant projects, even a tiny gain in efficiency adds up to millions and millions of dollars over the 30-year life of the plant. Okay, now let's talk about the financial supercharger. The Inflation Reduction Act, or IRA, has completely rewritten the rules for domestic manufacturers like First Solar. It's literally turning policy directly into profit. This right here, this was the first big signal to the market. In late 2023, First Solar announced it was selling $700 million worth of its manufacturing tax credits. This wasn't some fuzzy future projection. This was a deal for cold, hard cash, based on panels they'd already made. And believe me, that was just the beginning. Since that first deal, the company has cashed in on over $1.8 billion in these tax credits. I mean, this has created an enormous new cash flow stream that, it just didn't even exist a few years ago. So, how does this magic trick work? Well, it's actually a pretty brilliant self-funding loop. Step 1, they make panels here in the US, which generates these valuable tax credits. Step 2, instead of waiting to use the credits themselves, they just sell them to another company, like Pfizer, for immediate cash, getting something like 96 cents on the dollar. And Step 3, they plow that cash right back into building more US factories. It's a beautiful thing. So, this powerful combo of technology and financial engineering has built what I like to call a financial fortress. And really, the numbers here speak for themselves. First off, just look at this backlog: 76 gigawatts. To put that in perspective, they are essentially sold out for the next 3 years. This gives them incredible visibility into their future revenue and basically protects them from the crazy price wars we see in the global market. They're playing a whole different game. And they are absolutely flooring the accelerator to meet that demand. Fueled by those tax credit sales, they're on track to nearly double their US manufacturing capacity by 2026, with huge new factories coming online in Alabama and Louisiana. Now this slide, this is the one you really need to see. Look what happened to their profitability as those IRA benefits started kicking in during 2023. Gross margins didn't just rise, they exploded. From just 8% in the first quarter to nearly 40% by the fourth. I mean, that is an absolutely stunning transformation. So you boil it all down, and it really comes down to these 3 keys: a balance sheet with over $2 billion in cash and more cash than debt, a laser focus on US manufacturing that perfectly aligns with policy incentives, and a vertically integrated model that gives them way more control over their supply chain. Okay, but it can't all be good news, right? A proper analysis means we have to be skeptical. We have to seriously consider the bear case. What could go wrong here? So let's stress test this thesis. What are the biggest threats that could possibly derail this growth story? This is exactly what a good portfolio manager always does. There are 4 main risks to keep an eye on. First up is policy risk. The company is a huge beneficiary of the IRA, so any changes to that law could really hurt profitability. Second, competition. As other companies build U.S. factories, First Solar's price premium could shrink. Third, tariffs on parts from their own overseas factories could raise their costs. And finally, tellurium, a key raw material for them, has a limited global supply.
All right, let's bring it all together. It's time to weigh the bull case against the bear case and come to a final conclusion.
So here it is, the final weigh-in. The bull case really rests on their U.S. dominance, that massive IRA cash flow, a locked-in backlog, and a real technology edge. The bear case, well, it all hinges on the risks we just talked about. Their reliance on policy, rising competition, potential tariffs, and those raw material constraints.
And I think this quote from an A-Invest report really nails the bull case. It says, First Solar is not just a beneficiary of the IRA, it is a catalyst for domestic clean energy leadership. The argument here is they're not just passively benefiting from policy, they're actively using it to cement their leadership role in America's energy future. They're not just riding the wave, they're helping create it. And I'll leave you with this final thought to chew on. Is the future of this company really about technological breakthroughs in solar power, or is it a story about the successful execution of American industrial policy? The answer is probably a bit of both. And that central tension, well, that's what makes First Solar such a fascinating case study today.